Hello and welcome to this edition of the PolicyBazaar show. Today we are going to talk about something which is extremely critical to all of us, and that is our health and how to protect our health. Now, when you do financial planning, health becomes a very, very critical part of it, because if you were to come down with a disease or with an ailment, the sheer cost of treatment is so high that unless and until you don't protect yourself, it can throw away your entire savings in a jiffy. So joining me today are two very eminent experts. I have with me Amit Chhabra, who's the business head of health insurance at PolicyBazaar.com. And also joining me is well-known certified financial planner, Surya Bhatia. So let me ask the first question to both the panelists, and that is, Amit, how important is health insurance to a financial plan according to you?
Why does one, just taking a step back and thinking, why does one do financial planning? Typically, financial planning is done to save for the future, right? You would want, because you're earning right now, you would want to save money. You would want that your future is secure, when you're retired, or for your kids. Now, what a lot of people end up doing is they think about financial planning as investing the money that they have. What they don't really think about is how to mitigate the risks. And the biggest risk that today, in today's world that we have is health, right? We look at some simple facts, right? The advent of lifestyle diseases has increased so much. Diseases like cancer and all have become very, very common right now, right? The other thing is the medical inflation that one's going through right now. It's increased dramatically. It's increasing by almost 12 to 14% every year. So healthcare is becoming more and more expensive. So while one does do financial planning to save money and save money for the future, a lot of people end up missing on the fact that if you don't have a comprehensive health insurance cover, all the money that you've been saving all these years while you're working may just go down the drain very, very quickly at the time when you need it because of a health expense. So I think from that perspective, health insurance rather, should be the first step of financial planning that anybody must take.
Surya, you're a financial doctor. So, when you sit and draw out somebody's financial plan, where does health insurance fit in that? Is it right at the top?
I think top of the ladder, Vivek. There is no two questions about the same. I think when you do a financial planning, what does that exactly a plan mean? It just means that your current expectations, desires, your aspirations, goals need to be met with your future desires and goals. And if I try to do that, following that process means that I do need to ensure that whatever my corpus is there, it needs to be safeguarded, kept aside, meant for long term, and no nasty surprises should be coming in way. As Amit mentioned, that it should not be having that I have a medical cost coming up into play and I'm spending most of my money over there. So therefore, a health insurance play a very, very important and a critical role in ensuring that my financial plan has a very smooth journey.
Surya, one of the things that becomes very imperative to have a financial plan, and I'm just stepping back a bit, the reason we need to have a financial plan is because one of the biggest enemies to our money is inflation. And Amit made the point about health inflation being very, very high, medical inflation. How do you study the role of health inflation and then link it to a financial plan of a person?
I think it's very, very important over here because health inflation in India especially is one of the highest in the world. And that is simply because my expectations, because I'm converting my country from a developing to a developed country. So I want the best of everything to come to me. I'm trying to copy the West and want the best of the technology, best of the medical facilities to come and available to me. And for that, it turns to be expensive. And for that reason, the inflation cost is just zooming up. I think the last few years, the inflation is actually crossing more than 20%. And that's very, very expensive. It may even continue to do that for the next few years till the time you reach a certain platform, certain level where the medical cost may come down, but don't expect it to come down from an inflation perspective because the cost will keep on going up. So you have to make sure that your health insurance is taking care of your future needs as far as the overall cover is concerned. And as you grow in life, your expenses on health are bound to go up. That's typically has to happen with every age. As I age, as I mature, my expenses have to go up. So I have to keep matching with my my health insurance and even topping it up in times to come.
Amit, is there a growing awareness, the points that both of you are making about the importance of health insurance? I think people in the earlier generations, either, you just depended on your group cover, or if you were working for the government or the defense have a very good, post-retirement health cover as well. But are you seeing a growing trend where at least young people, since you're a digital powerhouse, so to speak, and you have a lot of young people probably sampling you, is there a growing awareness on the points that both of you are making?
I think there definitely is. So no point denying that. There is an increase in awareness. Yes. Is it enough? That's where there is a maybe, because what we are seeing is three kinds of people. One is the aware lot who are basically saying, yes, I need health insurance, and we do customer surveys, right? So customer survey came out where almost 50% of people who bought health insurance bought because they saw something happening to a family or friend, right? So somebody got cancer or somebody was caught in a bad accident and they had to spend lakhs of rupees on health and they didn't have insurance. That is what scared them into buying insurance. So that's there. So that's one segment of people who are aware and who are buying the right amount of health insurance. There is the second segment who are aware, yes, but they don't buy enough. So they may think that a 3 lakh cover or a 5 lakh cover will be enough. Which, when you are young and you are fit and fine, it may seem okay, but it may not actually be okay when something goes bad. So they are aware, but they're not spending enough on health insurance. And then there's the third lot who are like daredevils, right? Who think that nothing's going to happen to me. I'm just 30-year-old. I'll probably buy, when I turn 50. What they don't realize is it's a very bad idea to do that, because one, you may not get a proper health insurance at that age. It may have too many exclusions, or it may be too expensive at that time, or something may happen to you now when you're not covered at all. So I think that's where majority of the people who are, the young lot is where they're lying right now. So there is awareness, but yes, there is a lot to be desired.
Surya, what is your own experience? I mean, you deal with people of different age groups. Do you still feel that people wake up to it only after, as Amit said, something strikes in the family, some near and dear one probably, or you yourself feel you have a debilitating disease or an ailment, and then you wake up and start calling you and saying, look, get me a health cover. Is that still a trend, or is the younger generation more open and are realizing that I better get it now when I'm healthy rather than getting it when I'm unwell?
I think it's a combination of all. Yes, surely there has been improvement over the last few years, where I think the awareness has gone up between both the younger and the middle-aged people to actually go ahead and have a health insurance. But I think it's too far a distance. I think there are many people in a percentage term who need to realize that how important and critical a health insurance policy is, which needs to be taken right on day one. Instead of deferring it for whatever reasons you may have, it's good to buy that health insurance policy. The reason could be any. It could be that you think that my employer is covering me. You may think that I don't need it because I'm very young right now, or a very small cover being covered by my parents, my family. And hence I may delay that. You think I can buy it 5 years, 7 years down the line. But anything which happens to you, any ailment which comes to you, they don't come knocking on your door asking you, shall I come or not? It just strikes you. And if you don't have that, and it's not adequately covered for you, you will be really, really gasping to get a good cover for yourself, because at that time, no one will offer you, because you don't make any business sense for anyone. So you need to ensure that you need to get that insurance right now to make sure you are totally covered. I think one point over here also is, Vivek, for example, like a car insurance you have. It's mandatory for you and me to buy a car insurance. I don't have an option. I can't take my car out. So you have an Income Tax Act which provides you a Section 80D benefit to give you the benefit on that front, but it's not mandatory for you to buy. Mind you, there is one segment of people who buy health insurance to get that small tax break. If there's no harm, if you have that's kind of a mandatory for you, just like a provident fund being deducted from your salary, at least for the salaried class, that a part of it has to be bought for your health insurance premium. Maybe that can start a trend, but you need to have some force coming at your back to ensure that it's for your benefit, you get the tax benefit. But yes, it's so important that everyone should be having a health insurance.
Amit, you talked about health inflation. Both of you talked about that. When you look at the cost of health insurance, has that also been jumping as much, or is the good news for consumers that it hasn't really, and the competitive pressures have made sure that the rates are fairly low in our country compared to other countries?
So if you look at the affordability of health insurance in India, India is actually one of the cheapest health insurance markets across the world. Couple of reasons. One, awareness, right? People are still not aware. So insurance companies don't really want to make it very expensive for the customers, and customers won't really enroll into the health insurance plans. So that is one. Apart from that, India in general is very competitive. So there are about 25-30 companies which are selling health insurance in India. So there is, as you said, there's that competitive pressure also there, definitely. And we are seeing, to be honest, a lot of very good steps also taken from the regulator, the IRDAI, which are helping develop the insurance industry overall, right? So there are steps around standardization, there are steps around building more trust that a customer will have into health insurance companies, making sure that there are no last minute bad surprises happening to the customer at the time of claim. So a lot of positive steps have also been taken by the regulator, which are helping create that good feeler around health insurance as a segment for the customer to think and invest in.
Okay. Well, time for a quick break here on the Policy Bazaar show. When we come back, Surya and Amit both even answer some of your questions, and we are also going to talk about how much health insurance do we need. Be right back. Keep tuned. Welcome back. You're watching the Policy Bazaar show, and today we are talking about health insurance and financial planning. Surya, you talked about the tax incentives, and you made the strong point that just like you have the third-party insurance mandatory for cars and automobiles, you should have the same for health. But even there, the government has been increasing, isn't it, the limit that you can avail of? Take us through what is the tax exemption available and how does it work? What are the limits?
See, currently the Income Tax Act on the health insurance is governed by Section 80D of the IT Act. The limits have been being increased over the last few years, which is a good positive sign. It simply means that whatever premium you are paying for your health insurance policy as a premium for yourself or for your dependent members in the family is allowed to be deducted from your gross taxable income, which means your income goes down by that much amount, which comes under the eligibility of deduction, and your net taxable income then comes down from a taxation point of view. The current benefits available is 25,000 rupees for an individual, and likewise for his parents, if he covers have a separate insurance policy, another 25,000 rupees gets covered over there, which means if you and your parents are less than 60 years of age, you get 25,000 plus 25,000, which is 50,000 rupees of deduction under Section 80D. If your parents are above 60 years of age, the deduction on that account goes up to 50,000 rupees. And likewise, if you are also above 60 years of age, then your deduction also goes up to 50,000 rupees, which means total deduction is available of up to 1 lakh rupee for you. In case of NRIs, the deduction is only capped at 25,000 rupees each. HUF also is for 25,000 rupees, but overall the maximum you can claim is up to 1 lakh rupee depending on the age of the assessee you have.
All right, time now for the Mythbuster segment of ours. And today the question we are saying, or the myth we are trying to address is, the myth is that health insurance needs to be bought only to save on tax. Amit, do you still see a lot of people buying their health policies in Jan, Feb, March? Because that's around the time when they buy life insurance. They tend to buy health insurance as well because, there's that tax break. The chartered accountant tells them you can save tax if you go and buy this. Sorry, no offense. I know you're a chartered accountant, but so is that something that should be not done at all? I mean, what is the driving force should not be taxed, right?
The moment the government drops prices of petrol or diesel by say 10 paisa, you'll see people queuing up outside the petrol station. They may end up actually spending more than the 50 rupees that they would have saved on petrol, but it's honestly it's Indian mentality to a certain extent. All of us, including I, have it. We tend to save every penny as we can, right? It may actually end up being a bit foolish on the customer front as well. But yes, as you said, 31st March is the biggest day for any insurance company at all, right? So that's definitely there. It's good in a way because it's at least a trigger for buying health insurance. But I think it's also sad because customers don't really realize the futility of health insurance. They're buying it just to save that some bit of tax. What they don't realize is health insurance will come in handy, at a time when your entire savings or financial planning will go for a toss if you don't have that health insurance. So that myth, to be honest, is reality to a certain extent, but as we discussed earlier, it's changing definitely. Customers are becoming more and more aware.
But I still don't mind it. People going and buying insurance for whatever reason.
At least the
JFM also.
Exactly.
Still they're getting the right product at least.
Exactly.
Yes, that's important.
Still, it's not bad. At least because by force or whatever wrong reasons they are buying it. But at least they're ensuring that they're buying the health insurance. That's more important.
Because it's not directly an investment product,
Absolutely.
right? It's more your own safety.
So maybe
the
I'm
more
forced indirectly to buy insurance. I still don't mind that.
What's the average ticket size that you're seeing nowadays?
So from a sum insured perspective, I'll talk about sum insured because I think that's more relevant. Typically, we've seen people buying 5 lakhs per person is what we see as the average sum insured that's bought. How much should it be? So the next question is, how much should it actually be, right? I think the question is, how much can you afford? Because the higher the better. The reason is very simple, right? As we discussed, lifestyle diseases, cancer, it's increasing, it's becoming more and more prevalent, right? So again, a typical mentality a lot of people would have is, let's have a 5 lakh cover right now, maybe increase it at a later stage, when there's a chance of me getting a heart ailment or, cancer or something. But it can actually happen anytime, right? Heart attack could strike anybody anytime, or cancer could happen anytime. So I think from that perspective, it's how much can you afford? Like it should be as high as 1 crore per person if one can afford it. But yeah, to say the least, if you stay in a tier 1 city, say Delhi, Mumbai, Gurgaon, you should at least look at a 10 lakh cover per person. At least look at that kind of cover, because you look at the kind of medical facilities are here in these cities, they're very expensive. And you would never want to compromise on your convenience or your health when it comes to getting treated yourself. So you would want to go to the best of hospitals, you would want to go to see the best doctors. So at least 10 lakh per person is the sum insured that one must look at. If you can pay more, definitely pay more and get a higher sum insured.
All right, here's a question that we've received from one of our viewers, and let's take that question. I am 30 years old and live with my wife in Delhi NCR. We plan to start a family in the next 2 years. Our combined family income is about 20 lakh rupees, and we can save 5 lakh rupees every year, which I invest in mutual funds and fixed deposits. Both of us have a health insurance policy from our offices, which provide a cover of 3 lakh rupees each. What are the benefits of buying an individual policy, and what sum insured and benefits should I look at? A very interesting question, a very important question. In fact, 2 questions here. So one is, of course, whether they're adequately insured or not, Surya, and is this whole group cover versus an individual policy?
Yeah. Typically, when you see earlier days in a group insurance, when you have an insurance policy available through your employer, there was a trend that you could even do a portability of the insurance policy when you retire from that company, which means that you could transfer that policy in your own independent name when you quit the job. The trend still exists, but there's a cost which the employer has to pay if you want to have that option of portability available. Now, many employers are not going ahead with the portability benefit. So hence, you have to check out first from your employer that does that portability option exist at my end, that can I transfer when I quit my job, can I transfer the policy into my independent name, covering both myself and my family, depending on whoever people are being covered under that policy. If the answer is no, we'll discuss both the answers. If the answer is no, then you need to make sure, come with me, you need to have your own health insurance policy. The sum assured which you have right now is on the lower side. You have a 3 lakh of cover. As we discussed earlier, you need to have at least a 10 lakh of cover for both yourself and for your spouse. Now, because currently your employer is giving you that cover of 3 lakhs, you can actually have a 10 lakh of family floater covering both you and your spouse. Typically, a 10 lakh cover for a 30-year-old couple will be around 10, 12 or 1,000. That should be the number. And in case your company allows you the portability, then also you should look at having an insurance policy of your own, or make sure that you enhance that policy. It's a good policy. If not, go for a smaller cover and try to increase that over a period of time.
Your thoughts on this?
So I think one small thing, and again we were talking about how is health insurance important in the financial planning part, right? This is a very typical example. You save 5 lakh rupees every year, but health insurance is not on the top of that list. So I think that is very, very critical. See, and you mentioned that you're planning to start a family in the next 2 years. It becomes even more imperative to have adequate coverage. The good news is there are plans in the market which also give maternity coverage. So they can give maternity coverage up to say 1 lakh rupees, which will be the typical expense that happens at that event. You might want to invest in a plan which will give you coverage at an individual level. Additionally, it will also cover for the maternity event or any complications related to that. I think from a group or a corporate plan versus an individual plan, see there are 3 scenarios which are important. One is the cover enough? So you currently have a 3 lakh rupee cover. Is that enough, and will that be sufficient, in case something strikes? The answer is probably no. You might want to look at least a 10 lakh rupee cover per person. So that is one. Secondly, what happens when you change a job, or say you retire, or you want to do something on your own? Does that cover still exist with you, and will that be sufficient at that time? That again is a question mark. And these policies keep on changing, right? So there were a lot of companies which offer say a 3 lakh or 5 lakh rupee cover may move to a lesser cover at some point because of cost or for various reasons. That's where you will be left sort of stranded because you will not have adequate coverage at that point of time. What also you must realize is most of the health insurance plans that we buy come with some waiting periods. So there are certain named illnesses like say cancer or knee replacement or cataract which have a 2-year waiting period before they get covered. So I think it's very important to buy early and buy when you're fit and fine, so that at a later stage when any of this strikes, you don't have to worry about waiting periods and they've been taken care of. The good thing is, as Surya said, right, the cost for say for your combination comes out to about 10,000-12,000 rupees, which is nothing in the bigger scheme of things. It's too less a cost from that perspective, but it'll give you complete peace of mind, and it will ensure that your finances don't take a hit when something bad strikes you.
If you too have a question and you want experts to answer it, please feel free to drop us an email at PolicyBazaarShow@PolicyBazaar.com. Repeat it again for you, PolicyBazaarShow@PolicyBazaar.com. Thanks very much, Amit, and thanks, Surya, for coming by and sharing your thoughts with our viewers. Well, that's all the time we have in this episode of the Policy Bazaar Show, but we'll be back next week with lots more around protecting you. Thanks for watching.